Hello, everybody. Welcome once again to this weekend. What a week it has been. We're back again, once again, another live stream. So happy to see you guys here. And also, big shout out to the people who watch this on the replay. You guys are awesome. You guys rock. You all know it. And the folks in the house know it as well. So, before we jump into the news, we're going to talk a tiny bit about those channel memberships, and I'm going to drop some free channel memberships. We're going to do that right now. Let me just drop these, and we'll see where they land. So we got a few of them coming through. Let's see here. It hasn't announced it yet, but it did say, okay, all right. Allison Parker, Amanda W., Joe Schneider, Stan Gray, and Jordan Alsup. There we go. There are 5 lucky winners for this month. So, as channel members, you guys will get that opportunity to choose the July channel membership video. So, whatever it is going to be, it's completely up to you guys. So, over on the community tab, when you go there as a channel membership, you'll see the channel member posts as well. I did post one up, I think either yesterday or the day before, asking what you guys want to see, because you guys will tell me what you want, and then we'll throw up a poll with all of the different items that I've heard back on, and then you guys will vote, and that is what the video will be. So that channel membership video, the exclusive one, that'll be coming out not this Saturday, coming up, but the following Saturday. So I'm going to let it ride for a little bit to find out what it is you guys want. And last month, you guys made me do a reaction video, and that was absolutely fun. So we'll see what you guys want me to do this month, and we'll certainly do it. Hey, maybe you guys want me to do another reaction video, or actually, I heard rumblings from somebody that they think I should play GeoGuessr. And that would be kind of funny. If I did it, it would, of course, be the Canada version to see how well I know Canada. But whatever you guys want, we'll do it. Just be sure to let me know, get your votes in. Well, at least get your nominations in, and then we'll get the vote stream up probably this week. That way there we can get that all together so I can start planning to build that video for you guys. Okay. Let me quickly just say hi to those in the chat. We got Jill in the house. Hello, Jill. We got Wayne in the house. Hello, Wayne. Enid is in the house saying good afternoon to everybody. And we have Lisa in the house saying hi there. I thought about making a joke about Lisa's name because I messed it up last week, but I'm not going to do it. Not going to do it. Jordan's in the house. Hello, Jordan. And thank you so very much for the gift sub. Yes, absolutely. And those of you who didn't win a sub, if you want to be a sub, doesn't cost about the amount. Basically, once a month, it's like giving up 1 cup of coffee. Supports the channel. You get to find out about everything I'm doing behind the scenes, every trade, every dividend that rolls in, all that fun stuff. So definitely jump on that. All right. Abalash says, hi, Banana Bread fans. Yeah. I'm trying to think if I should just call you guys the Banana Bread Army. That's one of the names I'm floating around. Once I have it worked down, then we'll start looking at the possibility of doing some merch and stuff like that. Sid's in the house. And Lisa's back in again with the laughter, all because of her name. Yes, I am sometimes very horrible with names, and I will admit that totally. Jonathan says, hand pink waving. Awesome. All right. Now, hopefully you guys like this new format I have for here where I've got all of the topics over there on the side. So that's kind of a neat thing. And when we move to a topic, it turns red. Holy banana bread. Isn't that kind of awesome? Anyway, it's probably mundane, but it amuses me. So we'll leave it at that. Yeah, see, Enid says the Banana Bread Army. Yeah, exactly. Who can stop an army all filled up on banana bread? I don't think anybody can. So that's one of those things we'll have to sort of keep in mind. All right. First story of the day. We got a lifeguard shortage in Canada. Holy cow. And that's why, if you guys saw the title of this of this is "Somebody Save Me." I pulled that. That's actually a reference to Smallville. That used to be their theme song. So I thought that was appropriate for this topic. June 25th. What is June 25th? Oh, 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 okay. Holy banana bread. Wayne, you get a no prize for that. That's hilarious. Oh, yes. And Jordan likes the new graphics. Holy banana bread. See, I know my username is weird, but there's a reason behind it. I'm thinking you raise bulldogs to be seeing eye dogs. That's my guess. My guess is that's your name. That's why your name is Working Bulldogs. Seeing eye dogs that are bulldogs. Let me know if I am right or far off. That's just my wild guess. I don't know if I've ever seen a bulldog as a seeing eye dog, or maybe it's an emotional support dog. I'm not sure. So the June 25th part, holy banana bread. Like I said, Wayne, that is absolutely a mistake. So that should, of course, read July, whatever today is, the 9th. So yikes. All right. I will fix that for next week. That mistake is going to be with us all day. So we can continue to make fun of June 25th if you would like. So that's kind of funny. All right. Now, oh, right. The lifeguards. So back in the day, we had this thing that came along called a pandemic. And so when that happened, that first summer in the pandemic, well, there was no longer a need for lifeguards. All the beaches were closed, all of the pools. So as a result, all the lifeguards were out of work. I'm sure some of them probably went on supports, but a lot of them did move on and find new jobs. So because of that, we've got a lifeguard shortage. So what exactly does that mean? Well, it means to the point that right now we're having a hard time getting enough lifeguards to man all the pools and beaches and things like that. Different places have actually come across a few different ways to try to fix this problem. So in Ontario, to be a lifeguard, you used to have to be 16 years or older. They've lowered the minimum age down to 15, just so that they can get a few extra young lifeguards. I don't know if I'd want to have a 15-year-old pulling me out of the ocean or something, but, well, I guess there's no ocean technically in Ontario. Well, I guess if you went, no, I was going to say if you went north up to the Hudson Bay, that's sort of like ocean. But anyway, that's sort of semantics. Now, Winnipeg, what they're doing to try to get some more lifeguards in is they have waived all the fees to get certified as a lifeguard. So over in Winnipeg, no problem. You want to get a lifeguard? It's free. Come on in. Let's do it. British Columbia, they've just opted for, let's just pay them really, really well. So in Vancouver, you're looking at anywhere from $28 to $35 an hour to be a lifeguard. So that's not too shabby if you want to make a living swimming. So Jordan, of course, says, swim at your own risk. That's the way I grew up. That's the way it should stay. If you haven't taught your child to swim, keep them away from the water. The public shouldn't have to pay to monitor. No, but I think part of it is when you got pools, it just kind of makes sense because things can happen in the water. But yeah, you probably don't want your kids just going to the lake to swim if they don't know how to swim, all of that fun stuff. Let's see here. Okay, I guess I was wrong. So Lisa says, I used to train American Bulldogs for dog sport, obedience, tracking, and protection. I started the channel many years ago before YouTube was this popular as a way to share my training with others. Okay, that makes sense. Kind of cool. And yeah, like I said, I have never seen a seeing eye dog that is a bulldog, but hey, I'd be open for it. And of course, before people use their phones for video, I know it's funny. I am really, really surprised at just how many people watch all of their YouTube on their phones. It's just, it blows my mind. Now, maybe it's because I'm older, but I currently watch most of my YouTube. I would say 90% of my YouTube I watch on my desktop. But of course, that's just me. But apparently, even my mom watches all of her all of her YouTube on her tablet. So that to me, I find is really, really kind of funny. Oh, and Jordan's replying to the pools. So pools, yes, I agree, need a lifeguard. Guess that's a little privilege coming out growing up near a great lake. Yeah, no, absolutely. I mean, I grew up near a lake, and the only place that had a lifeguard was the beach. And there was at one end of the lake, but most of the places we swam, we didn't have, lifeguards, but we all knew how to swim. And we always swam, together. Like it wasn't just one kid going in and swimming by themselves. So if somebody got into trouble, there's people there to help. But I've never seen anybody get into trouble myself personally, but it could happen. And just an FYI, not the short, squat English bulldogs with no muzzles. Okay. Okay. Oh, and CS watches YouTube on my TV. Yes, and you're not the only one. I know the dancers watch the YouTube on the television. So, and I do watch a tiny bit of YouTube on the television. Generally, when I come downstairs and it's time to start TV night or something, if we're going to watch some shows, if Jill's in there doing something, I'll just throw the YouTube on the TV and watch it there. I finally figured out how to give people likes there. So, speaking of likes, be sure to hit that like button. Ooh, I worked that in. I didn't even intend to work that in, but I worked that in really smoothly. So I should get a like just for doing that. It's actually, it's funny. The likes just sort of helps the algorithm get out. And then that way there are sometimes people who are bored, don't know about the channel, see all of a sudden this pops up and they say, let's go check this out, see what we got. And that's kind of cool. All right. Let's move to our next story. So our next story is called Threading It, and I'm sure you guys know exactly what that's all about. So our good old buddies over at Meta have released Thread this week. And let me tell you, I kind of like it. I went over to check it out, and it kind of reminded me of Twitter in the old day before Twitter became kind of a I don't know if I want to call it ad heavy, bot heavy. Almost now it's almost politicized. So it was kind of nice to just have a place where people can just sort of chat. Now, I keep in mind that Thread is new. Eventually, I think as Thread develops and matures, we're probably going to start to see ads and things like that because this is Facebook. Facebook is not going to just let something not get monetized. Heck, when you look at Facebook now, how many posts are from somebody you know before you have to go through a whole bunch of sponsored posts, or sometimes they even just send posts to you that they recommend. It has, it's from some page or something. I don't know, but it's pretty cumbersome. And I imagine you'll start to see that in Thread, but it'll be interesting to see if maybe Zuckerberg sort of starts thinking that, hey, with Thread, people are really liking it like this. They're liking it in a kind of a wholesome way. Do I want to really mess with that too much? He will mess with it, of course, because it's money. But let's just hope for a while it never completely devolves to the point of where Twitter's at. I still use Twitter, and I still think Twitter's a useful tool. So I have no intention of dropping from Twitter. So we're going to have to sort of see how that goes. All right. Now, just give me 1 second here. Perfect. Okay. We got a couple more people in the house. I've still got a couple more things to say on Thread, though. I just want to mention Jay's in the house. Hello, Jay. Great to see you. And here is Brian. Brian, you're here earlier than normal. You normally sneak in right at the end. I'm impressed. So the other thing with Thread is everybody's calling it a Twitter killer. I don't think it will, but I think it's going to hurt them big time because we're now at a point that in the first 24 hours of Thread being a thing, they've had 300 million signups. Now, that's kind of big. Now, keep in mind, though, if you're already on Instagram, it kind of almost sneaks you in there and you end up signing up pretty quickly because it's just a click or two to sign up if you've already got an Instagram account, because that's how it was for me. So that is awesome. Now, Elon Musk, of course, is not happy about Thread, and he has threatened to sue them because he is saying Thread is too much like Twitter. He is saying that a lot of the people he fired got hired by Zuckerberg to come over and work on Thread, and they brought a whole bunch of Twitter trade secrets with them. So it's hard to say whether or not that is what's going on there. I don't think he will be successful. I think what's going to happen is a lot of the advertisers who've been pulling away from Twitter, they're going to hook up with Thread and they're going to be happier over there and they may not come back. So I think Elon is in a world of trouble with Twitter right now. So we'll have to sort of see how this all unfolds. I'll tell you, if that cage match between Elon and Zuckerberg actually happens, it's gonna be one brutal match. Oh dear, it'll be one for the ages. And Brian mentions his time zone, so yeah, absolutely, because you're on the West Coast, so it is a little bit earlier there. And Hugh has entered the building. Hello, Hugh. It is good to see you. Awesomeness. All right, now let's just move right on to that next story. The next story is all about jobs, and more jobs. So, in Canada, our jobs reports came out last week, and it's not. I mean, it's good for people who got new jobs, but we gained 60,000 jobs in June. Now we were anticipating gaining jobs in June, but we were only anticipating about 20,000. So this is a lot of jobs. Because of this, because of the strength of our economy right now and the strength of our job market, we're almost guaranteed a 25 basis point hike on June 12th. So that's going to be crazy for anybody right now who's on a variable mortgage. This is going to be another dagger to the side, unfortunately. But that's what we're looking at now. In the U.S., they're running into a similar thing. So ADP, they reported 497,000 new jobs in June, which is twice as much as what they were expecting. The Fed is, of course, absolutely not happy with this. As you know, their goal is to slow the market down. Now, if you guys noticed, Thursday and Friday, we had some pretty red days, and it's all because of these job numbers coming out of the U.S. Everybody's afraid that we got another rate hike coming from the U.S. Fed as well. Now, that's not this week. I believe it's the following week around, I think it's on the 26th, actually, to be honest. I think it's around the 26th or 25th, somewhere's in that area. But we do have that Fed one coming up as well. So that's one of the things to sort of keep in mind. All right. Whew. Now, we got another story, and this is actually kind of a cool little story. So in Saskatchewan, a judge has ruled that a thumbs up, so an emoji, it can actually be used to validate a contract. So what had happened was a person who was basically, they were a grain buyer. So this grain buyer faxed a contract over to a farmer, and he then asked the farmer, he said, "Hey, is this good? You know, is this confirmed?" And the farmer just sent him back a thumbs up. So the grain buyer assumed it was good, and of course it turned out that it wasn't. So the grain buyer said, "Okay, I'm going to sue you." And so he sued the farmer for breach of contract, and the court ruled in his favor. They basically said that a thumbs up constitutes a yes, and that resulted in basically the farmer had to pay $82,200 because of a lost lawsuit. So this is kind of interesting because this is the first precedent for this in Canada. So now we have precedent that a thumbs up is a yes. So before you blindly send thumbs up to people, keep in mind that it's not just, "Oh yeah, I saw it," or it's just "Hey, conversation's over. Here's a thumbs up." Make sure you're not accidentally agreeing to something, because I'd hate to see any of you guys get sued. I don't think that would happen. I mean, I was actually surprised that this even happened to begin with, but it does happen from time to time. So it's one of those things that you do want to kind of avoid. I love my water. Okay, our next, excuse me. All righty, let's go with our next. Oh, And Wayne has verified that it is the 26th. I thought it was the 26th. So next Fed rate decision is on the 26th. Thank you, Wayne, for verifying that for me. All right. Now, our next story is once again all about that Bill C-18. Holy banana bread. So what has gone on is now we're at the point that the federal government, so, the liberals and well, basically the federal government, it doesn't matter if it's the liberals, it's the whole federal government at this point. They're pulling all of their ads from Meta and Instagram, and they're basically saying that, okay, you guys don't want to play ball, we're not going to give you any of these ads. So what does that mean? Well, it basically boils down to about $10 million a year that they're losing from the federal government. Now, they have not yet pulled their ads from Google or Alphabet because Google is in talks with them. So Google basically, they basically said that they're open to finding a solution, and they're going to partake in some of the upcoming regulatory process to see if they can find a way out of this. But Facebook, but Meta, I'll just call them Meta has said, no way, absolutely not. If we bend over to you, then other countries are going to want to do it too. So Meta's saying no. Now, here's the interesting thing. Meta does actually claim that Facebook has generated approximately 1.9 billion clicks in Canada for news articles in the last year. That traffic, they claim, is worth about $230 million for the publishers. So that's kind of the amount of money that they're no longer getting because Facebook's going to block them and Instagram's going to block them. So it's interesting. Now, Quebecor in Quebec has also said they're going to pull ads from Meta and Instagram. And I also think the Toronto Star said they're going to do it as well. So we're getting a little bit of some ad stuff happening here, but for the moment, Google is still playing ball, which is good because I certainly don't want to have to. If I want to do a web search to get a Canadian news story, especially when I'm building this, I don't want to have to go to DuckDuckGo. I would rather just do it through the Google. So hopefully they get some kind of a amendment or something that keeps that going. Although I will say I completely think this Bill C-18 is absolute banana fuddling bad. It's not a good bill. I don't like it. I think it really should have been realized into something that actually is fair for both sides, because this is not really fair for the tech giants. And I don't normally take their side, but in this case, yeah, they kind of deserve to have me take their side. So that is not a good thing. What do you guys think, though? Are you guys kind of how do you get your news? Now, of course, I know somebody's going to say, I get my news right here, and that's kind of cool. But where do you guys normally go to get your news? Are you guys going on to Facebook? Are you going on to you going through Google, or just tell me what it is you guys do to get your news. Now, County Auto Garage says stuff like that. My parents saw our old communist country. Yeah, I guess I could see that. Yeah, I don't like to see any kind of censorship. And this is technically isn't state sponsors, censorship in that sense. This is more or less just that whole issue that they're having with Bill C-18. Yeah, exactly. Good old Bill C-18. So I'd like to see a resolution, because it's not that Google doesn't want Canadians to have access to the news or Meta. It's that they just don't want to have to pay for these links. And Google has a point. The big tech has a point. If somebody shares a link on, if I had a website that, let's say, did news, so let's say Banana Co. News, and somebody shares a link from there, well, they're basically sending somebody else to my site. So I'm making money from AdSense or whatever I'm using on that site. So that's not a bad thing. By saying to Google or Meta, oh, well, you have to pay for that link to get put on your site. That's crazy. It really is. Because why should Google pay me as well as I'm already getting paid by AdSense. So it doesn't make sense. It really doesn't. I think anyway, it's a bad piece of legislation. It's sad to see that it got through, and I know the conservatives said that when they get elected in 2025, well, if they're elected in, that's one of the ones they would look at scrapping. I hope so. I really hope so. So you messed up so bad when common people and creators are siding with big tech. I know. That's the whole thing. It's like I normally like to sit in the middle and just report the news. It's like, okay, this side said this side said that, but this is one where I can't sit in the middle. It's like, and big tech happens to be on the winning side in my opinion, in my humble opinion. Maybe there's stuff going on behind the scenes I don't know about. I don't know, but right now, from what I've seen, totally, this is I'm team big tech on this one. So, yeah, alrighty, let's go to our next story. And our next story is that BC port strike. So the BC port strike, I mentioned to you that it began last Saturday. It is still ongoing. Now, this BC port strike, it's a big deal. Right now, there is no sign of a resolution. So what they're looking for, this is what they want. So the union that represents 7,000 port workers, one of their big time demands is that they want an $8,000 inflation adjustment payment and an 11% raise. They're also looking for a little bit of guarantees against some of the automation that's being done at some of the Western ports. Here's the problem right now. According to the Canadian Chambers of Commerce, they say that the week-long strike that we've just had already, they said that's going to cost Canada roughly $5.5 billion. That's huge. That's a lot of money. I've seen the Liberals throw away that much money on simpler things, but it's still a lot of money. And if this really goes on, I think this can really become a much bigger issue. And the funny thing is, the Chamber of Commerce have actually asked the Fed to legislate the port workers back to work. Now, the unions for the port workers said, mind your own business. We don't need to be legislated back. Let's just get a fair deal. Now, the last time there was a big port, a port that was supply chain related, it went for about 12 days before they got legislated back to work. So we'll have to see what happens. Getting legislated back to work is a possibility on this one, though, for the simple reason that we are looking at supply chain issues that this is starting to create. We haven't felt it yet, but we will. It's coming. This type of stuff, when you have a disruption in the supply chain, it usually takes a month or more to start filtering into our level of the economy. So right now, the damage that's being done by this strike, this is something that's coming for us in the fall. So let's keep that in mind. It's not one of those things that we do want to see go on for a very long amount of time. You've got food on ships not being unloaded. So any of it that is time sensitive, we're looking at spoilage. You've got inventory, things like that, not getting to stores. And a lot of that stuff that arrives in Vancouver, any of it going to the West Coast area, that's not happening. So they're going to have to start shipping things from the East Coast. So it's not a good, well, not so much the East Coast, but maybe Ontario, things like that. So it will impact us all big time the longer this continues. I would prefer that the BC port strike, is resolved without legislation. But I also understand that there is kind of a ticking ramification to this, that it may take the government stepping in. I would hate to see the government step in. I hate to see government step in. I really, really hope that we don't see that. I really hope they can get something resolved this week with that port strike. Oh, holy banana bread. All right. That was the pork strike. All right. Now, let's talk a little bit more about some wildfires. Not in the way that we're thinking, though. So one of the big side effects of these wildfires is that we're looking at a situation where it's going to start rising up the price of timber. And we've already started to see the price of Canadian timber going up. So part of it is that there's been just simply more interest in our timber companies. and investment interest as well. Interestingly enough, even Americans are starting to look at Canadian timber as something to invest in as well. So it's almost like the wildfires have brought a little bit of extra attention to that sector in Canada, which is really interesting. But here's the other thing. We do have some mills that have closed down because they're too close to where some of the fires are. So we have enough wood right now. Like right now, we're fine with the amount of wood that we have, but that's not going to be that way forever. And if we start to run out of wood, it's going to be like back at the beginning of the pandemic. If you remember at the beginning of the pandemic, everybody and their dog decided, oh, I'm going to build a deck, or I'm going to build something else in the house. So there was a run on lumber. And as lumber started disappearing, the prices went through the roof. We could see that again. We could see, especially if these wildfires in like Quebec and things like that, if they keep on going, and if we start getting more through the summer, and they're predicting it to be a bad season, we could see some interesting price hikes in lumber. And what that means is if you are invested in some of these lumber companies, you may benefit from that big time. So that's something that might be worth throwing on your watch list. Just, check it out, do some due diligence. All right, and let's see here. Wayne says, Candace, you read my mind. Long the July contract since June 7th. Yeah, let's get that contract. Let's get that contract signed. That's what I'm saying. So, we're actually flying through the news pretty fast this week. So I think that's because you guys aren't talking much. Start throwing whatever you want in chat so we can go off on some tangents. Because trust me, you don't want me to go off on my own tangents because God knows where I'll go. So let's switch to our last story, and I'm going to warn you ahead of time. This is a word that I do not like. Futures contract. Okay, that's where we're going at. Okay, awesome. I like that. I like that completely. All right, amortizations. This is a word I found this on the web. Hi. Siri was about to tell me what an amortization is. So, all right. Amortizations. Wait a minute. I've got another story as well, but we'll get back. I'll backtrack to that. I don't know how it didn't make it onto the list, and that's on me. So with amortizations, a lot of people have been extending them well beyond 25 years. So one of the ramifications is when you extend, you of course end up paying more interest than what you're paying on that principal. So that, of course, is going to increase your mortgage cost big time over the long run. So there's a lot of issues with that. So currently, these extended amortizations, one of the areas is they're really, right now, it's the variable rate mortgage people who are kind of grabbing some of these. And a lot of times it's because, you know what, the rates are going up so high, they have no choice. It's like, okay, increase my amortization or, foreclose on my mortgage. So if you don't have a choice, you don't have a choice. But here's an interesting thing. We got a couple of things coming up. First of all of those pandemic fixed income people who got in on those 5 years, well, a couple of years from now, they're all going to be in the same boat. And they're going to be looking at what they want to do with their amortization. Oh my God, I could say it perfectly fine. Now I've lost it again. It's just this word, for some reason, my brain does not like it. But BNN Bloomberg did a little breakdown, and I like it. They basically said that if you have a mortgage of $500,000 and you've got a rate of 5.8%, if you extend that amortization from 90 years from your original 25 years, this would actually increase the total payment by 177%. So your total payment on that $500,000 house would be, and get this, it'll be $2,624,469.50. That total, most of that is interest. So of course, the total amount of interest would be basically a 374% increase in total. So that total interest on that is $2,124,469.40. That's like insane. So if you can avoid it, obviously avoid it because it is going to cost you a lot more money in the long run. If it's a situation where it's like I have to extend my amortization or I am going to default on my mortgage, well, then yeah, extend it. Make sure that make sure that you don't lose your house. So that's kind of one of those things. All right, and the last little thing was just a quick little thing on TSX, so the Toronto Stock Exchange on sale. So right now, the TSX has actually been much slower to recover than the American market. So as a result, your yields on your dividend stocks are higher. So these are some really good deals. And there's also a lot more growth potential because once we do start to kick things in gear in Canada, there's just a lot of money to currently be made right now on the TSX. And even a lot of American investors are starting to really take a hard look at the TSX and say, oh my God, look at some of these opportunities right now, because it is all happening with the TSX. Tomorrow's video, not tomorrow, Tuesday's video, I'm actually going to do some buy the dip stocks in some of the biggest sectors in Canada, just to give you an idea of some of the deals that are available out there. So it's definitely one you want to check out. All right, now, actually, before I get to David, I'm not jumping over you, David. I just want to quickly touch on this one because it does touch on that amortization. So it's better to have 30 to 35 year amortizations than to see the house market collapse. So fires, insurance, real estate is about 20 to 25% of our GDP. So yeah, absolutely. Wayne said in the US, you can match your term with the amortization. My gal has a mortgage, 4.25% over 30 years. Okay, not too bad. All right, now David, I've got back here. Welcome to the stream, David. Hello, what do you think about Manulife dividend growth rate? Over 10 years of dividend growth rate, it's close to 10%. Yeah, Manulife Financial, so MFC, they've actually done pretty darn good. Now, they're a quarterly stock, but they have a pretty healthy dividend. It has been growing, and I think most of these companies are in good shape. Mind you, right now they've had a few challenges over the last few years. So Manulife, for example, that big hurricane that ripped through the Maritimes last year, that certainly impacted them a little bit, and some of the wildfires as well. But that's normal. They have money put aside for that. I do like our insurance sector, so both Manulife, Sun Life Financial, Great Western Life. I think there are some good companies. I think they're also quite undervalued. And I mentioned that Tuesday video. I have a feeling you may hear a tiny bit about that sector in that video. So definitely tune in for that. But Manulife is a company I do like. They have also, and this is the big thing about Manulife, they have cracked into China. So they have access to the Chinese market, which the other two don't. So this is a big thing for Manulife. I think they're definitely looking to have a good year or two. So, and maybe even beyond that, but they're a company I do like. I do like Manulife. And Richard from Montreal is in the house. Hello, Richard. Good to see you. All right. One more reminder, once again, for the community members, make sure you check out the community member post. It's under the same thing, community tab, and let me know what you guys want to see for July's exclusive video so I can get that out to you. We'll put it all in a poll, and then we'll be voting early in this week, probably Tuesday or Wednesday. I'll put that poll up. So get whatever you guys want in there. And heck, if you're like, oh, I don't want to go hunting for it in the community tab, then just message me, let me know. Like I said, somebody's already asked if I could do a GeoGuessr game, film a GeoGuessr game of me doing Canada and see how well I do. Oh dear. Now I have lived in a lot of different parts of Canada, so I may do well or I may not. It really depends on the luck, right? If they drop, for example, someplace up in the middle of Nunavut, I probably will have no idea where I am, but we'll have to see. We'll see how that goes. If, of course, that wins, because it's whatever you guys vote on, I do. That's what I like. Deep dive wise. So this week we have a deep dive coming out on Friday. Right now as well on that same community tab, there is the voting for it. And I think right now Royal Bank is way out in the lead. So If you're not a fan of Royal Bank and you want to vote for somebody else, head over and vote. Or if you really want to drive home Royal Bank and make sure I do Royal Bank, get over there and throw another vote on Royal Bank. So that's going to be kind of cool. So that's what we got coming up. And that's really, really awesome. Okay. Also, I've been throwing up a few more shorts. I'm going to try to do more shorts because everybody's doing the shorts. Let's get a few done. We'll do that. No kitten this week. I know a few people were like, want to see the kitten, but not this week. The kitten had a little bit of an accident on the steps, so she was breathing a little funny. So we did take her into the emergency vet, and they're just doing some x-rays just to make sure everything is okay. They think everything's okay, but they want to be sure. Of course, if you ever take your animal in to get x-rays, holy banana bread. Anywhere from, they totally gave us our estimate from $1,400 to $1,700, depending on if they need to send it off just to have an expert look at it. So, oh, wow, it is definitely expensive. Pets can be very expensive. And with rate hikes going up, it makes me wonder how many people are not giving the proper treatment to their animals because of how much it costs. And that's the thing. This is the way I look at it. I mean, when we decided to bring a new kitten into the household, that kitten is a family member. So I don't want to pay for it, but it's one of those things that's like, okay, you got to do it. It's like, okay. So yeah, so that channel membership thing, that helps pay for the kitten. No, I'm just, it does, but I'm just, saying that because it was kind of funny in my head. Yeah, that is absolutely expensive. And this is a good idea. Richard says, get a pet care insurance. It's worth it. I'm beginning to think that. I'm really beginning to think, and I think that this accident the kitten had on the steps, I think that to me means this could be the time to start looking seriously at that. All right. And Country Auto Garage says, I just renewed my mortgage from 2.7 to 6.6. Holy banana bread. Now, I bet you feel that every month. That's not a small amount. It's a significant amount of money. So it's not something I would like to see happen. But I mean, more and more of us are going to see this type of stuff happen. It's just the way it kind of works. So that's going to be kind of neat. Holy banana bread. I'm still kind of flabbergasted, sort of think of how fast prices are going up. Yeah, and here's the funny thing. I know a lot of economists are thinking that, okay, sure, we're probably going to see hike rates start to come down maybe in the middle of 2024. The more I look at how strong the economy is right now, the more I think it's not going to be the middle of 2024. I'm really thinking towards the end. And even if we see rates come down, they're not going back to where they were. So, if you're one of these people who's thinking, okay, I can't wait for those rates to get back down to 2%, that's never going to happen. The rates that went down for the pandemic, that was for a specific reason. So rates will never get back down that far. So right now, the prime, they said they're going to cap it at about 5%, supposedly. They'll go higher than that. I mean, there's no hard and fast rule at 5%. But yeah, rates will probably, after everything is good and we're all ready, we'll probably see those rates backtrack. I would say no lower than 4%. I think 4% is going to be the bottom. So you're not going to see a lot going back. So when you're thinking of your expectations, when you're thinking of your long-term planning, and this is a good rule of thumb, it doesn't matter what's going to happen. The good rule of thumb when you're thinking about long-term is to think of the worst case scenario and plan for that. And then if it's better than that, which it should be, if you've come up with the worst case scenario, it should be better than that. Then, okay, cool. You're going to be pleasantly surprised. So in this case here, the worst case scenario is if you're thinking of, let's just say you're thinking of where are the rates going to be at the end of 2024? Well, the worst case scenario is they're going to be higher than they are right now, and plan for that. That's kind of that whole thing. It's kind of one of these things where long-term planning, I think when you're especially if you're relying on rates is a hard thing to do. Now, I know a lot of people now who are thinking, okay, it's coming up time to, to renew. Should I go variable or should I stay with a fixed? Well, logically, a variable is probably going to be your better choice only because we're expecting rates to come back down. But you got to be prepared that it could take longer than you expect for those rates to come down. And you have to be prepared that if they don't come down anytime soon, that you're going to probably be paying a little bit more um, than you want to, of course. So keep that in mind. That's kind of a neat little thing. Um, and Abalash says, a friend of mine has 4 mortgages at 229, so 2.29%. Now I'm thinking that they're renting those places out. Either that or they have a very big family and they don't all like each other. One of the two. I'm thinking that they're probably renting those places off. Now, hopefully, with rents going up in that situation, if you're that landlord, hopefully you're able to cover your costs easily in a case like this. So that would be kind of cool. And then Abalash says, a friend of mine has 1 primary, 3 rentals at 2.9 cents for another 2 to 3 years. So that's fantastic. So 2.29 is really, really good. And if they're rentals, I mean, you're probably pulling in some good rent, especially if they rented them. Well, depends, I guess, on when the tenants came in, because, and there's a few other things. Like there are some places that have rent control, some places that don't. There's a lot of different rules, but hopefully they're doing okay. And Kay Miller says, my mortgage is paid off. Excited to see GICs at a decent rate again. Oh yeah, like right now. I know on EQ Bank, the 1-year GIC is at 5.25%. And that is kind of nice. Now I have actually moved a few things into a cash. So CASH, the cash ETF. So I've moved a few small things over into that at the moment. So that to me is another good way to have, so a little bit of money that you have access to pretty easily. But I do like the GICs, and I like the fact that they're at a decent rate, especially if you have, if your retirement portfolio, if you're moving into that zone, you do want to keep a certain amount of fixed income, and these rates are great for that, which is great. Jill says pet insurance is also expensive. Yeah, it comes down to one of these things, right? Like how often does a pet run into a situation where all of a sudden you've got, a $1,500 bill because of a silly little accident. But it does happen, and it's one of these things that you kind of have to weigh it. If you're one of these people that it happens to all the time, then you absolutely probably want to start looking into pet insurance. But it's one of these things, you could have nothing ever happen and then it happens. So that's kind of one of those things. You got to kind of watch out like that, because it doesn't matter how, like I wasn't worried about getting medical insurance for myself for the simple reason that nothing had ever happened. And then when it did, I looked into medical insurance after it, and it's like, oh, well, now everything you have is currently a pre-existing condition. So, your medication, we can't cover any of that if you sign up. But hey, if something horrible happens to you after this, we can help you with that. So it's like, okay, cool. But some of my meds are absolutely crazy expensive, but I am looking into finding ways to fund them a little bit, because you need them to live, and you got to pay the piper, unfortunately. So it's kind of one of those funny things. Yeah, both me and the cat, me and the kitten, we're in a race to see who can cost us the most amount of money. I'm winning, but that's fine. All right, the news is done. I do have. Actually, I have one more thing here. It's not really news, but we have next week. So next week, of course, in Canada, we got the Bank of Canada's rate hike. That's coming on July 12th. So Wednesday. Down in the U.S., and these are 2 important days. We got on Wednesday, we got their CPI coming out. So Consumer Price Index. And on Thursday, we got the PPI, which is the producer's price index. That will give us a clear idea of what's happening in the US with inflation. Now, if these turn out bad, expect some big red market midweek. I'm hoping they're going to turn out good though, because they did have another, I know they paused last time, but let's hope these start to look pretty good. But like I said, these will really have a heavy impact when we get to the 26th and the next Fed, whether they do a rate hike or not. Now, they probably are. I'm leaning towards them doing one, but it will still be good to check that out. Hi, my watch is being very vocal today on this live stream. It's almost like I should put a picture of my watch up there with me on the thumbnail, just to sort of say, hey, it's me and Siri. All right. Now Richard says, my parents had pet care, and yes, there's a pricey monthly premium, but it will save money in the long run, especially when they start getting older. Yeah, that's absolutely true. Vets, to me, anytime I hear, anytime something's, off with one of the animals, I'm kind of like, Jill is like, we need to go to the vet. And I'm like, all right, let me check this out first. Let's make sure we really need to go. So sometimes no, we really don't. Or sometimes we got a checkout already coming. Like if I've got a checkup for a cat, for example, like when I had a checkout for Autumn, and I was kind of like, okay, there was something off, and I can't remember what it was. And I was just like, it's not serious. Let's wait till the checkup. They can look at that at the same time. And it turned out to be nothing. But with the kitten, the kitten, after she had her little mishap on the steps, she was, she had some funny sounds to her breathing. So it was a no-brainer. It's like, yeah, she's going over to emergency because we're not going to take chances, because this is a cute darn kitten. I like this kitten a lot. So now Andrew says, I'm hoping for as it will give God buying opportunities. Okay, so Andrew's hoping for those red days. And you know what? Sometimes psychologically it's fantastic to see a green market. It's like, oh yes, I'm making money. But you're only making money on stuff you've invested, right? When you have that red market, then you're like, I'm buying the dip. There's songs out there. People, I think some other YouTubers have made a buying the dip song. Maybe for some reason, I think it was me, Kevin, who made one back in the last bull market. But that's just one of those things. If it is starting to come down, then yeah, absolutely. Red markets can be where you make that money, so that when that market does turn green, you've got the seeds in the ground and you're ready to start profiting, which is fantastic. David Dowling says, now I'm trying to make a choice between Manulife or Scotiabank. What do you think? I think they're both fantastic. Manulife, and well, here, I'll give you the thing. With Scotiabank, right now you've got a crazy yield because of where they're down quite a bit. In fact, I have it written down right here. Just give me a second here. So right now, Manulife Financial at this moment, they're about 48.7% below where their fair value is. So they're down quite a bit. There's lots of room for growth with Manulife. So there's a lot of opportunity there. Now, with the Bank of Nova Scotia, they're only down about 38.3%. So there's certainly going to be some growth. But keep in mind, with the banks, dividend-wise, you're probably going to get better dividends from the bank. However, Manulife Financial keeps on increasing their dividend every year. It's going to be close, but here's the thing. The banks, you're going to have a little bit more suffering, I think, especially when all of these mortgages that are currently on fixed start moving to variable or get renewed. I think there's going to be defaults. There's no way around it. And these defaults are going to be painful. Now, I know that the big six, they've been putting money aside, so they're ready for it. But let's just hope it's not worse than they think it's going to be. And it probably will be worse than they think it's going to be. It always is. So that's just something to keep in mind. So between the two of them, I like them both. I think they're both solid choices. I think long-term, they're both going to pay off. But I think with the Bank of Nova Scotia, so with Scotiabank, you're not going to see the payoff as quickly, I think, as you'll see it with Manulife. So that's kind of where I'm there. I would still say, I mean, myself, I would almost go with both. And then just sort of determine, do I want to do 50-50? Do I want to do 60-40? That's kind of how I would handle that. Or CPX looks amazing as well. Yes, they do. Let's see. Ooh. Never enough cash to buy the dip. That's always the thing, right? Never enough cash to buy the dip. Well, that's why I like some of these ETFs, like well, I was mentioning cash, for example. So, there's a few others. I did a video on it just about a week ago or so. They're great little ETFs that you can just park cash into. So they're still making you some money, like 5% or so. And you got money coming in. So that way there, while you're waiting for, whatever your buying opportunity is, as long as the market's open, you just sell them, you buy the other one, bang, done. And at least that way there, you're not just sitting on raw cash and not getting any kind of interest on it. So, and Andrew says, I have been saving a little. Awesome. And the friggin' Oracle is in here. That's always the problem. Create. And Lisa says, work pet insurance for my breed is $12,000 to $15,000 per year. I'll take my chances. All right. Yeah. And thumbs up. Hey, that's contractually something. I had to say that. I still have cash to deploy. I'm waiting for red 2. Yeah, absolutely. And Kay says, I am dripping the dip. Oh, I like that. Dripping the dip. That actually sounds kind of funny. Davis says, thank you. So I think you got an answer out of that ramble I threw at you. Andrew says, my divvies are coming next week. Nice. And Avalash says, do you think financial stocks still have to come down with a crash? So foreclosures before the bull market. I've been having this funny thought lately. Normally we think of a bull market, a bear market. We think of in terms of the whole market. I'm thinking that it's going to be a lot more sector specific this time. Sort of like in the US, the tech stocks obviously have moved into a bull market currently. And I think the banking sectors are going to lag even here. And I think they will still be kind of in a bear. If you look at it from that sector point of view, I think they'll still be in a bear market for a bit longer. I think it's kind of just really interesting. I think the way it's happening. Now, I do think that it really comes down to, will they have put enough money aside to handle the losses they're going to be experiencing? I think they're in better shape now than they were, say, 6 months ago. I think they are seeing that writing on the wall, and they're trying to make positive movements in that direction. Now, I'll actually really get to touch on this quite a bit too on Friday, provided Royal Bank wins the deep dive. And I think right now they got a huge lead, so I don't see them not winning. But I would absolutely say that there's going to be a little bit of a pain up front with those banks. There's going to be, I see them like, I would almost say that you'll see a recovery, like a small recovery between now and that kind of big point where all of these mortgages start renewing. And then you're going to see a little bit more of a correction at that point. Now, when it comes to the bottom, and this is the question everybody's always asking, is the bottom in? Is the bottom in? Well, I don't know. Nobody really knows. Now, there's a lot of signs that you can look at for whether or not the bottom is in. Now, over on Brandon Beavis's channel, his dad, Mark Beavis, does this thing it's roughly every month. He'll come on, he'll go through all of the financial indicators as to whether or not we have hit the bottom. And so far, it's always been no. Some of them are starting to look a little bit better. And now we've got some of them that are saying, well, maybe we have. So it is looking better. Now, I know Meet Kevin thinks that the bottom happened last October. And yet I've talked to people who are like, oh no, we got another 50% to go. So it's hard to say if that bottom is in. The way I look at it is people who wait for the bottom to do all of their buying. That's a gamble because you won't know. half the time when you're on the way to the bottom, you're thinking, oh, there's much more room to go. And then things churn around. You're like, oh no, this is just a bull. This is just a little bull, a bull pump. And we're, it's going to be like we're fine. We're fine. Like a dead cat bounce or something. Here's the thing. You can dollar cost average into a dip. So for example, you may be waiting for the dip, but we've already been through the dip. We may be on the climbing side of the dip, in which case dollar cost averaging now doesn't hurt, because at least when you look at it, when you look at it this way, when you're in that bull market and everything is peaking and high, whether you bought it at the very bottom of the dip or whether you bought it as you're kind of climbing up the ladle a little bit on the dip is not really going to be that significant, because both situations you're going to be in a lot of profit. So that's the way I kind of look at those both situations. So keep that in mind when you're thinking about where you want to buy. If you are 100% convinced that we're not at the bottom and the bottom is still coming, well, it still is not a bad idea to DCA a little bit, get a little bit of money in now while the market's in a pretty good spot. Ideally, of course, if you had bought towards the end of last year, between October and December, you would have got much better deals. But also, the Canadian market, don't ignore it. And this is funny. Normally, I'm saying don't ignore that American market, but don't ignore the Canadian market right now, because the Canadian market is kind of lagging behind the American market when it comes to recovery. So that's one of these things to keep in mind. Micro versus macro. Are we talking economies? I think we are. I think you have to kind of weigh both in. When you're looking at it from a long-term investing perspective, macro tends to be a bit more prudent. When you're looking at quicker profits, then you're really focusing a lot more on the micro economy. Let's see. Could be a fire sale for houses when the defaults come in. Maybe that might be an interesting thing. Andrew agrees with something. Maybe on the fire sale. It depends on how fast the banks need to recover monies. Well, and that's the thing. If banks have been putting money aside, preparing for these losses, that helps them not get into that situation where they do have to have a fire sale. But a lot of banks right now, when it comes to like amortization, they're usually willing to let you roll it out to the point that your debt's just getting bigger with them, but you're still making a payment, pure 100% pure interest payment, and there's still interest that's, you're past that tipping point, but they're letting it happen. Some banks are doing that. So keep that in mind. They will try to create a deal, even if it's not in your advantage, that keeps you in your house. But there's going to be some people that, are going to default. There's nothing you can do about that. Ooh, did I miss this one? During COVID, people had leeway on their mortgage payments. Yeah, and you're going to see the same kind of thing here. There'll be leeway, but it'll be through this whole amortization extension. Oh, this one here. Lots of stocks stuck in trading ranges by the low hangers. Yeah, absolutely. When you're looking at, so for example, when I'm swing trading, I like to look and see what stock is doing. And if I can find a stock in a channel, so meaning that it goes up to the top and down to the bottom, up to the top, down to the bottom, then, I can buy at the bottom, sell it at the top, buy it again as it comes back down, and just keep rinsing and repeating that way. That's how I make money. So that's always good. I like a nice volatile market that's moving up and down that way. So that tends to be a good way for me to make some cash. All right. Wayne says in 1982, the Bank of Canada rate was 18%. Holy banana bread. That deserves a holy banana bread. Mortgage rates topped out at 21%. I was a mortgage lender at Can Bank. We had foreclosures, but not as many that were forecast. Too much hysteria. Yeah, absolutely. I mean, that's the thing. The 70s, early 80s, they would look at the interest rates we have today and they would be like, oh my God, those are amazing. 18%. Look at that. 18%. Yeah, they used to be much, much higher. Now, that's almost, oh God, that could be another whole hour discussion just about interest rates in the 70s, 80s, and what they did with inflation back then. But wow. Abolish says, do you think utilities are good to buy now? So AQN, CU, CPX, and RNW. So I think utilities are not a bad choice. I don't think they're a fast choice to getting profit, but I think they're a nice, solid choice. So with AQN, for example, Algonquin, I think they still have some more pain to go through. But I think long term, they're going to be fine. Canadian Utilities, they're a dividend king. So I definitely I certainly hold a lot of weight when it comes to that. The next dividend king will be Fortis, so FTS, and they're also utilities. But they're not going to become a dividend king probably till the beginning of the new year. So CPX and renewables, they're all, I mean, I think they all have some good opportunities in there. Enbridge as well. It's one of these things where do your due diligence, take a look at them. Be prepared with energy that because of the volatility of the price of fuel, gas, oil, that's going to sometimes cause them to be moving up and down and create a bit of extra volatility in that market as well. A little bit less volatility than in a straight up oil company like a Tourmaline or Imperial Oil or something like that. But you still get that filtering down into some of these utility companies. And if a utility company is really moving and diversifying into renewables, that's a good thing too. So look at them. If you're looking at them as an investment, look at them definitely on a long-term scale. I don't think you can go wrong long-term, but short-term, you may run into a little bit of volatility. And if you're the type of person who you buy stock and it goes down for 6 months, if that freaks you out and you get scared and you end up selling, then these are probably not the best for you. But as long as you kind of know that that's part of the deal, that's part of the way utilities, the way gas, the way oil, and the way energy in general works, then they're fantastic investments. Like right now, I have a good amount into Tourmaline, and they're down. Like right now, they're underneath their fair value. I think they're about 20 some odd percent. And that's a good amount. But they've got a half decent little dividend, and they've been paying a special dividend. They promised they'd do 4 of them this year. So far they have not lied. I've gotten 2. So I'm going to stick around at least to get the special dividends on them and sort of reevaluate whether I want that in Tourmaline, because I think I'm a little heavy on oil, or whether I want to move that to something else in the new year. So those are just a couple of little things that I have to sort of put into consideration. And K Miller, I have a term deposit GIC from the early 1980s. It was 8.5%. Yeah, that's nice. That is definitely nice. Andrew Blount. So Andrew says, many people have rich parents at the moment to help out as well, apparently. Yes. The number one easiest way to get a house in today's society is to inherit it from your parents who bought them when they were reasonable. So keep that in mind. One more reason that you want to be really nice to your parents on Mother's Day, Father's Day, Christmas, their birthdays. Never forget them. Ever forget them at all, because that may be your only way of getting a house. Unless, of course, well, you guys, at least you guys know how to invest, right? You guys know what you're doing. You're knowing how to make money. But honestly, with some of the interest rates, it's almost like no matter how well you're doing on this back end, the front end is running really fast. So, but I have a feeling a lot of you guys will be fine, hopefully. If not, let me know, and we'll try to create some content to help you along the way. Friggin' Oracle says, remember the cost of a house back then? The interest rate matched the cost back then. Houses are 4 to 5 times higher now. So take the high interest rate and divide it. Okay, divide it by 4, and it matches rates now. Yeah, that kind of does make sense. I think overall, I mean, well, other than the fact that you take back in the 50s, now we're going way back. I wasn't alive in the 50s, but I've watched Back to the Future, so I know. That's a glowing endorsement for my knowledge of the 50s. But I mean, back in the 50s, a single parent, so usually back then it was the man of the house, could go out and get a good, half-decent job and could buy a house and a car, no problems. Nowadays, it's a lot different. You really can't do that. So that is very interesting. And Andrew says, play the volatility of the utilities as a strength and buy low for good divvies. Absolutely. Absolutely. That's where, a little bit of technical analysis and a little bit, I know there's always that argument. What's better, fundamental analysis or technical analysis? They both rock. You just need to know when to use each one. So a little bit of TA and understanding support levels, and resistances can really help you find a good entry point. And if you're looking to do some swing trading, it can also help you find a good exit point as well. So that is not a bad thing. And Jay bought a Mara this week. Awesome, Jay. And Wayne says, check out BTE bouncing off 50 EMA since January. Channel trading. Yeah. BTE is actually, they are mentioned in my video tomorrow. Or sorry, Tuesday. I keep saying tomorrow. I'm so used to that video being on Monday, but I film it tomorrow and then I edit it tomorrow and then it comes out on Tuesday. But yeah, BTE is, and they're very undervalued. Let me just tell you how much. They're currently, let's see here. Oh no, BTE, sorry, I do not have BTE. I was thinking of BCE. BCE is undervalued a lot, about roughly 50%. But BTE is another energy company, and they have actually been doing really well. I do currently play them, and I've actually here's the funny thing. I have been playing them on in an American account, so I've been actually buying BTE on the New York Stock Exchange and playing that one a little bit. And I think right now I'm currently sitting in with a few shares of BTE, or did I sell them? I don't know if I sold them. I may have sold them and looking to get back in, but yes, I have been playing BTE. Do you ever think the prices in Canada will come down again? Honest answer, no. To a certain extent. Let me just say no with a caveat. So anything that's gone up by inflation, those prices are up to stay. So they're not coming back down. But anything that is currently inflated due to supply chain issues, those are the prices that do come back down because it's not inflation. It is inflation, but it's a different type of inflation. So those prices will come back down. So for example, when right now lumber's going up because of the wildfires, it's going to do the same thing it did back in the pandemic. The price will go up. And when there's no longer that shortage of lumber, it'll come back down. It's going to do the exact same thing. Let's see here. And Scott says 30 years ago, houses were 2.5 to 3 times income. Today it's 8 to 10 times. Yeah, it's pretty darn crazy. And plus, I mean, with the stress test today, even the down deposit for some people, the down payment can be like, it can take them forever to get their hands on that. So absolutely. BT, I do the same. I trade the US exchange only. Yeah, absolutely. That's the beautiful thing about that US exchange. And Andrew says Canada is a beautiful place. Canada is absolutely a beautiful place. And I have, I've lived in, Nova Scotia, Ontario, Alberta, and BC, and I've traveled all the way from coast to coast. So yeah, it's an incredible country. Not to say, I've also been to the US as well. I've spent some time in Florida, also Alabama. It's nice down there. It's a different type of nice, but I think every place has a certain level of beauty that you can certainly appreciate. First time I went to Florida, I'd never seen a palm tree before. So the first thing I did when I got off the plane in Orlando is I went and hugged a palm tree. I was like, I want to hug this palm tree. Don't know why, but I did. The next thing is I had to go see an alligator because these are things that in Canada I just never saw. But then, of course, when I moved to Vancouver, there's actually palm trees in a few places. Like if you go down around Richmond, which is that's part of Vancouver, there were some places down there that had some palm trees, and I was like, oh, okay, yeah. They kind of lost their zest because I'd already seen them in Florida, but that's how it goes. Let's see. Healthcare index was down Friday. Do you think it will be a good side to invest this month? I think right now the healthcare is a little down, but long term, healthcare is stoked for some crazy profits long term. Because right now we're in a situation where with baby boomers moving up, that is really, really, really turning healthcare into a very, very busy sector indeed. So keep that in mind. I think long-term healthcare is fantastic. Lots of lemon trees in Florida. I didn't actually see any lemon trees, but I did see some orange trees. So that was kind of cool. With the economy the way it is, a lot of old money is going to be spent, which is ideal for everyone. Yeah, that's definitely a possibility. All of that money that people have been hoarding over the pandemic, that's all starting to shake out now. That's one of the reasons that people are still able to spend money, because so many people had so much money to do, but no place to go. So there was a lot of money saved up, for that very reason. All right. So guys, we're coming towards the end. You got any final questions? Get them in there. Get them in there. We'll hit them. We'll hit them up. And then let's see. Coming up this week, once again, on Friday. Well, Friday, that's when I'm going to do the deep dive. It's probably going to be the Royal Bank. I'll also drop on probably Tuesday or Wednesday. I will drop the new voting for the next cycle when we do our deep dive. Keep in mind, if you want a company deep dived, you got to get the name to me and I'll add it to the pool. So I have a pool. It's basically a little file with all of the names, and I just put them in as they come in, and I just go down that list every time there's a deep dive vote. The company that got the vote, obviously they're removed because I'm not going to do the same company twice in a row. And the company who gets the lowest amount of votes, they also get removed. So if your company gets into the pool and I put it up and it does not get the votes, well, as in gets the worst amount of votes, it's gone. Simple as that. But everybody else stays. So 3 companies stay every week and 2 more companies get added. So there's always 5 to vote for. So yeah, get those to me. I will put those in. Now, Andrew says PRL. I assume that's somebody you want me to do. So I'm going to grab my book here. I'm just going to write this down and I'll add it to my file here later. PRL. There we go. And it doesn't have to only be a Canadian company. I will do American companies too. So, right now I think Cat and Apple are still in it. Although I think Apple might be on the verge of losing out this week. It's hard to say. Or maybe Apple lost last. I try to have 2 American companies, 3 Canadian companies. I try, but it's what you guys give me. That's what I put in. So yeah, all right, perfect. So that's what you wanted that for. Awesome. That is in there. Monday is a deep dive. So Monday we're doing deep dive. Monday is the buying the dip video. So we're using basically discounted cash flow models to analyze who's undervalued. What dips do we have here? Look at there. We got Meta. All right. I'm going to write that down here. So Meta, as said by Wayne. And Ty says, could you please review oil price? Yes, we could definitely look at the oil price. Now, that's not technically a video per se, but what we can do here is take a look at, I probably am overdue for an oil video, so we'll look at getting one of those, and we'll definitely cover a little bit about the oil price. I know right now, this very minute, WTI is on the rise. So it's currently sitting at $73.54. WTI, by the way, for those of you who don't know, that's the West Texas Intermediate. And that's a price of per barrel. So that's the big one. Most of your oil prices, most of your energy companies, if, for example, and this is what I used to do when I was day trading, when I bought into, let's say, BTE, for example, a lot of times if I watched the price of oil and oil did a big spike, I knew that BTE was about to spike as well. So I could sort of follow that around as well. So, and BTE right now is sitting on the TSX 444. So that's the Baytex Energy Corporation, by the way. I probably should have mentioned their name. So they're still there. Still day trading crude. Still day trading crude, bull market. Yeah. I mean, it's one of these things. I will swing. I now do swing trades. So it's kind of nice because I get into a situation where if I do buy BTE and oil decides to tank on me, that can happen. I can then hold out and wait because oil is one of these things that it moves. The price will move so much to so many different catalysts. So, for example, OPEC can come out and say, yeah, we're cutting production by 1 million barrels. That will normally drive the price of oil up. But at the same time, you've got Biden who's back there saying, I don't want the price of oil to go up. I'll just release some oil from the U.S. strategic reserves and try to counteract it. So you get all of these players that come in trying to control the price of oil. So sometimes oil can be very hard to play. But when you are looking at it overall, there's only so much oil in the ground. Prices go up, and you normally do see prices going back up in the fall. Because why? Because people in the northern hemisphere, that's when they start using heat again. So that tends to drive the price of oil up. Now, last winter, Europe ran into a situation where they had a mild winter. So all of a sudden, oil crashed. Why? Because there was an excess amount. The oil that was there ready for a cold Europe winter didn't happen. So we had an excess on the market. They started locking things down in China as well, and that created a whole bunch of a mess. And that's kind of the whole thing with oil. When you're dealing with oil, you want to be paying attention to politics more than anything else, because that is where it all boils down to. What's going on in the world is going to control that price of oil. And if a stock you're buying, like for example, BTE, is very heavily correlated to the price of oil, you're going to be playing that. Now, another thing too is there are inverse ETFs. So there is an inverse ETF for oil, for example, and you can play that. And then every time oil goes down, that ETF goes up. So the only problem is because it uses leverage on it, it goes up and down much faster than the actual price does. So you can make a lot of money really fast on it, or you can lose a lot of money really fast on it. I try not to play them unless I am 100% sure on the direction of oil. If oil's in a situation where it's kind of moving up and down, I tend to be a little bit more upset. And here's one. Yeah, so SCO is one. There's a bunch of them. There's also there's pretty much, you can pretty much get an inverse ETF for almost everything. You can get one for Bitcoin. You can get one for gold. So most commodities you can get it for. There's even, I think, an inverse one for Jim Cramer. So everything he recommends, they short. Basically, they short it, and that's how you make your money. So anyway, there's a lot of really interesting stuff out there. So as I said, all right, so we're at the end of the day here. Hopefully it's beautiful wherever you guys are. Maybe you're getting ready to do a barbecue tonight, because that would be fantastic. I know after here, I'm going to head downstairs and have some supper, which will be fantastic as well. Maybe hopefully get an update on the kitty so we can get her back in the house, which would be great. I'll be back here, of course, again next week. Cannot wait. For those of you who are channel members, let me know what you want that video to be. And if you're not a channel member and you want to join the cool kids, just click on that little $ down at the bottom of the chat. It'll give you an option to join the channel, and then you get to watch. Actually, the cool thing is you join the channel, you can watch all of the old exclusive videos from day one. So those are all fantastic. Anyway, do that. I'll be making a video for you guys, and we'll see what it's going to be. I can't wait to see what you guys come up with this time. I have a feeling it's going to be the GeoGuessr, though. I just have a feeling. But we'll see. Hopefully, give me some good ideas. We'll go from there. So anyway, in the meantime, guys, thank you for being here. We'll be back here next week. We'll have some more fun, and we'll see what the news brings for us. Until then, take care. Have a fantastic day, and we'll see you guys, next week.